And at this point in the cycle, if you're an investor and not approaching it from the philosophical point of view of Bitcoin, but from an investment point of view, you want to own less Bitcoin at this point in the cycle. It's always worked to own less Bitcoin, and that's fine. People seem to take that as like some huge judgment against Bitcoin, or no, I'm trying to make money. Where are we now? We're in the absolute guts of the bull market, as you keep pointing out, Will, right? So you can basically own anything, literally anything, Shiba, anything, and make money. Which one of these really have network effects? Which ones really have value? Well, that we're going to have to distinguish over time. Some of them, it's clear, right? Others less clear. So at this point, I'm at maximum risk taking. Now, I don't know enough to really want to go down the kind of really speculative end of the token market, because I just don't know enough about it. So I'm just picking blindly. So what I did is I took a basket of stuff to say, right, that whole bulk of alts is going to do well. Now, what's happened is it started with DeFi, then it's moved to these layer twos. And
layer twos, do you mean like scaling, interoperability?
Layer ones, and then the layer twos haven't done as well, I don't think. Might be from smaller ones, but I'm talking the kind of larger mid-cap stuff. The layer one Solana and stuff like that did astonishingly well, and I think the Binance chain was the one that started that whole thing off, and everybody started realizing it was going to move. And then I've got kind of macro strategic bets, because I think social tokens and the metaverse. So I'd been in those bets all year, and suddenly the metaverse bet pays off suddenly. But it's a random game to try and chase, what's going to be the next coin that goes up. So I'm not trying to play that game. I just knew that the whole space was going to go up. I wanted broad exposure, and I had a couple of macro bets. And then I had the Ethereum and Bitcoin bet. And at this point in the cycle, if you're an investor and not approaching it from the philosophical point of view of Bitcoin, but from an investment point of view, you want to own less Bitcoin at this point in the cycle. It's always worked to own less Bitcoin, and that's fine. People seem to take that as like some huge judgment against Bitcoin, or no, I'm trying to make money. Simple as that.
Sure.
Exactly.
Like I saw a video that was circulating yesterday, and someone was basically bashing you for saying what you just said. And I think what people are missing is not that you're fundamentally saying that, whatever X protocol is a better protocol than Bitcoin per se, but it's kind of in, like you described it with the bond market. But, if you're bullish on the S&P, you're not going to hold the S&P, right? If you think you're in like the secular stock market, bull market, then, you're not going to hold the S&P 500. And so like when you're just,
no, because you want to buy at that point, you want to buy the riskier things, because they're going to go up 500% as opposed to the S&P, which will go up 20%. Yeah, it's exactly that.
And as well, like, you're just speaking from being purely a capital allocator, right? And I don't think as well, you're necessarily like advocating everybody to do these things. I think we can agree that, for the average person, right? For like the average person just passively putting your income into this, you should probably just put it into Bitcoin and just buy and hold it. But, for people that are looking to, maximize the returns and they understand the opportunity cost, the massive opportunity cost that there can be in this ecosystem, then I think what you're saying makes sense. But I think people are missing that in the sense that you're not saying that Bitcoin isn't going to be at a higher price than where it is now in the next 3 to 6 months. But you're just speaking from, a perspective of being a capital allocator and understanding that there's opportunity cost, especially when you're in the stage of the bull market that I think we can both agree upon.
Yes, that's right. And, and that is proven out. I mean, and it's normal. That's exactly how humans almost always allocate capital. It's the same with time. All of the things we allocate according to how comfortable we are taking the risk. And so it's really straightforward, and it's not any other statement about Bitcoin or anything else. It's just purely about, okay, what am I trying to do? I'm a crypto maximalist. I think this thing is going to consume everything. And I don't really care how it gets there, because my job is not to stay in one community and say, I'm fighting to the death. It's like, no, I want this whole thing to succeed because it's incredibly democratizing. It's incredibly powerful for the world. And there's different opportunities for different people in it. And that's fine. And if you want to dip your toe in the water and you don't really understand the complexities of the space, and it's super complex, go with Bitcoin. I have no issue with that. That's what my sister-in-law, I got her into because it's easy for her to understand. I mean, I don't see what's so contentious about this.
We're 100% aligned there. I mean, on a technical analysis perspective, you just got to, I mean, at least the methodology we take is you compare everything to across Bitcoin, right? If you're considering holding an alt, it better be outperforming Bitcoin, because even if it's going in USD up in USD terms and it's Bitcoin's outperforming it, you're losing money. That's to Will's point, the S&P 500. That's the safe index bet. Set it and forget it. 10 years from now, it's going to be orders of magnitude higher, I think, if all of our theses are correct. But
yeah, and I must admit, I think the most important chart in the world right now is that ETH Bitcoin cross rate. Is that chart
absolutely
is a hell of a wedge pattern, and I would give that an 80% probability of breaking higher. Now, does that mean anything bad about Bitcoin? No, just means that ETH is probably going to have a larger bull run upcoming.
This means it's going to go up faster, a little faster. They're both going to go up. One's going to go up a little faster.
That's right.
So now,
and maybe you don't want to take that risk, and that's fine too. I'm not saying you should. You can just stay in Bitcoin. That's okay too. You still make money.
Sure. So we're talking about like the latter half of the bull market. How do you think about allocating capital heading into the bear market?
I'm thinking a lot about this. I'm actually setting up a crypto fund of hedge funds to actually do this. I'm not sure with 2 data points that we know how this one's going to play out. What's interesting is this bull market's playing out identically, as I keep pointing out on Twitter, to past ones. I'm not sure the bear market will work the same way. I'm just not sure because of the arrival of institutions and what's happening and the adoption phase that we're in. I kind of have a feeling it might feel more like this year felt, which is a series of accelerated rallies, a sell-off or sideways consolidation that goes on for a longer period, then another rally. And I think the whole space, and I have no real idea, but I'm just thinking it through, is I just think that everybody expects there to be crypto winter. And when everybody expects something, it's not going to happen. It's different when everybody expects there to be a bull market because everyone allocates capital and it makes it reality.
Self-fulfilling.
But I think because of the different players involved here, I'm not sure that you can afford to take everything off the table and wait and see what happens. So it's going to be a bit more complicated, I think, than we all think. And it's going to probably fuck with our minds a bit.
And do you think like Bitcoin, if you were just to theorize, this kind of trades more like the S&P, just slowly grinds higher, you see less volatility? I mean, when I'm looking at like the on-chain supply dynamics, it resembles kind of behavior or a lot of these like reaccumulation trends, et cetera, that we usually see in a bear market all happened over the summer. And so it's almost like you had this mini bear phase paired with, we had this rounded top and a very rounded bottom. It almost seems like the way the asset class is trading is a bit more institutionalized. You're seeing less parabolic moves up, this recent all-time high breakout. Everyone's expecting, okay, we're going to shoot up 25% as soon as we broke all-time highs. All traders hopped in. We got a huge leverage shakeout to the downside because everyone was expecting that. It just seems like the type of actors, like you said, are a lot more patient in general.
Yeah, I kind of think that. And then I put the chart of Bitcoin 2013 against Bitcoin now, and they're exactly the same pattern. So I'm like, it's a nice narrative, but it seems to be following the same kind of price action. Let's see how it finishes the year. We've all got big expectations, and we're either going to end up with egg on our faces and it's a slow grind higher, and we're all going to be sitting there thinking, okay, well, what change? And your thesis will be right. Or it just melts up and we're like, okay, it seemed to have worked again. I don't know. It's getting much harder. This end of year is probably the easiest phase we've got. And then after that, it's like the fog comes over because I can't get a clear probability. The most probable outcome is I think that we have a bit of tax-related selling into year end. We have a bunch of people who say the cycle's over because everyone expects December to be the end of the cycle. And then all the institutions come in in January because they've just been given new P&Ls and balance sheets, the hedge funds, everybody else, and re-add risk and new allocations. And that creates yet another upcycle that nobody's expecting. It's kind of what I think, but who knows?